Okay, welcome everybody. Today is January 15th, 2020. This is Governmental Not-for-Profit Accounting. We'll be starting our coursework today. We'll be starting in Chapter 1. For those of you all who were not here on Monday, just a few things before we get started. I want everyone to just take a look at the Moodle course here. So obviously it's spring term 2020 governmental not-for-profit accounting 440. At the top of the page here, you'll see we have some announcements. Anything that's of importance, I'll be posting on here on the announcements section. Um, right here is our syllabus for the semester for this course. Please read this before starting any coursework so that you know the rules of the class and everything. I went over this in detail in class on Monday. If you were not here, I'm not going to go over it again. We were having some recording issues, so please, on your own time, please take some time to pay attention to what's in this syllabus. That way, you know the rules, you know the content that's going to be covered, and there's not any issues. Also, Monday, I showed everyone there's a new way to get into Connect. There was actually an issue that I was unaware of, so I don't know if you've tried to get into it or not yet, but there was a little bit of an issue. I forgot to do a step to set it up. That issue has been resolved now, so it should be fine. So watch the little intro video here, and then when you click on the MH Campus, the McGraw-Hill Campus link right there, it'll take you directly to our course, and then you'll just click on the Connect button on the bottom, and then it'll just dump you right into the course where all the assignments are listed. You might have to fill out some of your information or something, but it should just drop you right in the course. So that should be good. If anyone has any issues, please let me know. Try to get in there sooner than later because the assignments are up and available. But however, the first assignment is not due till next week. It'll be due Sunday, and I make all my assignments due at 11:59 p.m. right before the next week starts to click over at midnight of that Monday. So that way, I know people have stuff they like to do outside of class and all that. That gives them plenty of time to get projects in. So usually, unless stated otherwise, my work is usually due at 11:59 p.m. that Sunday before next week. Okay, so today, as I said, we're in week January 13th through 19th. It's the 15th. We had the introduction to the course on Monday. We have a little slight intro that I just went over just now. So now we're going to be getting into chapter 1. And as you can see here, it says begin chapter 1 connect assignments. Next week, you'll see chapter 1 continued. Chapter 1 connect assignments will be due. Read chapter 2, and then it's kind of the same pattern we'll see here moving on, just so we have an idea of how the course is going to move. So with that being said, we'll go ahead and get into the content. Okay, so once again, this is Essentials of Accounting for Governmental and Not-for-Profit Organizations. This is Chapter 1. It's going to be an introduction to the accounting and financial reporting for governmental and not-for-profit organizations. Okay, just talk about a few things before we actually get into these slides here. So what do you think would be some of the differences between maybe a governmental and a for-business sector? What are just some things just off the top of your head you might know?
I guess the amount of resources you have at hand. Um, I'm not entirely sure. I guess they wouldn't have merchandise or anything like that.
Right. So governments operate a little differently than for-profit businesses. Obviously, for one, your for-profit businesses are mainly for the profit and for the investors and the owners. They want to turn profit. They're worried about what the net income is and the equity of the company growing. Right. So that's the main focus there. Well, for governments and for not-for-profits, they have pretty much a different focus. Obviously, they want to make sure that they're operating effectively and efficiently, but instead of just really being concerned about the returns to the investors and stuff of that sort, they're more so concerned about the sustainability of their programs and the well-being of the citizens and being totally transparent to the citizens. So they have more of an obligation to the public because obviously they derive most of their revenues from the power to levy taxes, whereas obviously your for-profit corporations and businesses do not have the power to levy taxes. It's from exchange transactions is where they're going to derive their main sources of revenues. That's another way it changes for government. Obviously, the main source of revenue is the ability to levy that tax, and then from some non-exchange transactions as well. We'll have some exchange transactions as well. We'll get into that. So there is some exchange transactions, but most of them are going to be from taxes and non-exchange transactions. When we get into some exchange transactions, we think of like water utility companies and power companies and stuff like that, of that source that some governments might have their hands on and have a part in. So that's just a little bit of a difference between the two. Is mainly is just who you're preparing the reports for, what you're accounting for, because we know that obviously in your for business. Your corporations, when you prepare your financial reports, it's to be useful for the users, right? They want to make the information useful for users. Well, nothing changes here. It's the same thing. It's just we're preparing the information for a different set of users, and it can still be banks or creditors or whatever it might be, or donors. But there's obviously, since there's a different means of what we need to be portraying within these financials, there's a different set of framework and stuff that we go about using for this, and the financial statements actually look different as well. There's actually different components to the financial statements than you would see in a for-profit sector. So that's just a little overview of the differences between the two sectors here. So now for Chapter 1, some of our learning objectives. We're going to obtain an overview of financial reporting for non-business entities. We're going to also distinguish between private and public sector organizations, identify the sources of authoritative accounting standards for various public and private sector organizations, and then define the 11 fund types used by state and local governments. So I don't know if anyone's ever heard of the term fund accounting. I don't know if that's probably new to you. Right now, we're probably more so used to just your balance sheet, your income statement, statement of cash flows, notes, and statement of owner's equity, stuff of that sort. Well, in governmental financial statements, a big part of it is made up of fund accounting, in which we'll see there are 3 different types of funds: governmental funds, which there's 5 governmental funds. There's 2 proprietary, which is like your business type funds, and then there's going to be 4 fiduciary type funds, which makes up a total of 11, which we will get into those obviously later into the course. So that's one of the big differences between the two sectors is the difference in the actual statements, and government is heavy into funds. So why would anyone be interested in studying governmental not-for-profit? A couple of these bullets here shows that a lot of governments and not-for-profit organizations actually hire accountants. They hire a lot of accountants to engage in their audits. Obviously, we know CPAs you have to have a CPA license in order to engage in an audit. And as citizens and donors, we want to have a better understanding of how our taxes and charitable donations are going to be used. I mean, obviously, no one in society really enjoys paying taxes. We have to do it, or we get penalties and fines and maybe even jail time. So therefore, it's something that we have to do. So therefore, we should have a right to know where our money's being spent and why they're levying taxes and taking some of our money. So that's just a few reasons why maybe studying governmental not-for-profit accounting. Another good reason, I think, of having a good understanding about not-for-profit and governmental accounting is for career outlooks. I mean, a lot of times when you think of accountants, people that really don't know much about accounting just have that picture in their head, someone sitting at a desk with a calculator just writing spreadsheets, and that's really not the gist of what goes on at all. Obviously, that there is bookkeepers and stuff, and that is their life. But really, for career-wise, it's a really good area to look at for careers. If you're going to go public in accounting, your hours are going to be very long. You'll most likely be working in tax or audit, and you're going to be probably working for an accounting firm or being a controller or whatever it might be, productions operations manager, whatever it might be. If you go the public route, being an accountant, there's a lot of stuff you can do in it. But like I said, there's going to be very long hours, and it's because it's public. But on the flip side of that coin, if you go into if you go the federal or state route, go the government route, or work for a not-for-profit, usually your hours are a lot better. They have really good benefits. A lot of times that's where you'll get into your jobs of working your 9 to 5 or your 8 to 4 and have your nights and weekends off, as opposed to in the public, you're going to be working over 100 hours a week usually. I mean, especially during tax and audits, tax season especially, you know. So that's a really good reason to study it as well and be familiar with it. I believe this is an elective course. Am I right? Yeah. So I think it's a good thing to have that. You know, at least by the time we get out of this course, you'll have a general understanding of how these funds work, and you have a better understanding of how the government operates. So, like I said, it's just a good outlook as for career wise. I know a lot of people aren't really into that whole working all the time. You know, work to live. You know, it's more so, you know, the opposite. So that's good. So that's something to keep in mind when you're looking for jobs when you get out of here. Don't shy away from the governmental jobs as well. So some differences in the governmental not-for-profit environment. Organizational purposes we've already touched on a little bit. Um, Governments are going to exist to further the well-being of its citizens by providing public services, and it's not for the purpose of generating returns to owners. So once again, it's for the people, just the general public, and not for the investors. Once again, the sources of revenues are going to differ in this sector. Governments obviously are going to derive many of their resources from taxes and other non-exchange transactions, which could be donors or stuff of the sort, pledges. But the main source is going to be from the power to levy taxes. So that's a big difference there. Whereas in the public sector, it's going to be based upon selling a service or a product. Some more differences in the governmental not-for-profit environment would be the potentially for longevity. I know you've probably heard in your intermediate courses or your principles the concept of going concern of a business. Does that ring a bell to you? And the going concern meaning that they'll be around for longer than a period of a year going into the future. So they'll continue to be a going concern, meaning that they're going to still be in business and continuing its operations. Usually a lot of times in public sector, obviously we know businesses can go bankrupt and go out of business or whatever it might be. Um, and we see that a lot with businesses. Obviously, the big Fortune 500s, usually if there's changes there, it's more because of an acquisition or a merge took place. But usually, um, when we see these businesses going out of business, it's usually in the public sector. So the going concern for a government is really not that much of an issue because they rarely go out of business because they have the power to levy taxes. So their revenue stream is pretty guaranteed. And so the focus of accounting is going to be for a longer term focus, and it's going to be on the sustainability of services and the ability to meet future demand, as opposed to merely turning a profit and trying to just be continuing as a going concern. So the potential for longevity is much greater than that of the public sector. The relationship with stakeholders is obviously a little bit different. Governments have an obligation to demonstrate accountability for public funds. We know if you're an investor, you know what the risks are, whatever the rating of the company is when you invest into whether it be bonds, the debt, or equity instruments. We know what the risks are. And then usually the stakeholders make the calls, and you know, the only accountability they have to you on the public side is either a dividend or, you know, trying to give you a return on investment on however it might be. But whereas the stakeholders, they're going to be having more of an obligation to be accountable because they're using our money that they actually just take from us. A budget is a big thing. Usually budgets, when we think of the role of a budget in the public sector of accounting, it's more so internally done from internal management. It's really the budget's really not really of a concern of investors or people outside of the business. Budgets are more so concerned for seeing if you can stay within the parameters of what you spend on inventory or, you know, payroll, whatever it might be, utilities. But in the governmental not-for-profit sector, it's very important. It's one of the most important things because they often carry the authority of law. And in doing so, it prevents public officials from spending outside their budgetary authority. So the budget is very important in governmental not-for-profit. So how accounting must adapt to the governmental not-for-profit environmental differences. The traditional view of equity accounts must be modified. We know the equity accounts in your for-profit business sector is going to be, you have like, your additional paid in capital, your paid in capital, your retained earnings, your AOCI, stuff of that sort, other comprehensive income. Um, you have your common stock, preferred stock, stuff of that sort, and you're not gonna be seeing the breakdowns like that of your traditional equity accounts. So everything you've learned from the previous, you can pretty much throw out a little bit right now. It's going to be a different view. It's going to be like your residual equity, and we'll get more into that as we get into the course. Budget compliance may be as important as income measurement. Obviously, budget compliance, as we said, carries the weight of law usually. So obviously, complying with the budget is very important. You can get into some pretty serious issues with that, which is obviously why it could be as important as income measurement, because the income measurement, obviously in the public sector, if you're not making money, then chances are you're not going to be a going concern very long. So budget compliance is very important. When do we recognize revenue in the absence of exchange transactions? So we know on the business side of things, the for-profit, when do we recognize revenue on for-profit, like for the intermediate? When
Like when the transaction occurs.
Right. So when the transaction occurs, when we fulfilled our obligations or our duties, whatever the shipping terms might be, it might be FOB, shipping point or destination, whatever it might be. But if we've brought that good or service, whatever it is that we're providing to the customer, when we fulfilled our obligations, if we're on the accrual method of accounting, we count it as revenue. Cash basis, we're going to count it when the money comes in. And so it's when we performed it and when it's earned. Well, here it's more so when it's measurable and available. So there's a difference on when we recognize revenue in this industry. Reports must reflect the existence of restrictions on the use of certain resources. So this is where fund accounting is going to come into play. This is how the reports reflect the existence of restrictions on the use of certain resources. Funds are going to be used for different reasons. So if we put the money in different funds, we can keep up with what the purposes are without them being all mixed up. Does that make sense? So that's how we're going to go about with the reports having restrictions on use of certain resources. And then non-financial performance measures are relatively more important for measuring effectiveness. So obviously, what the reason why non-financial performance is going to be just as important is because obviously we're providing services to the general public. So non-financial performances, like if our community, our city, whatever our municipality is running smoothly, and parks are being maintained and stuff of that sort. That's a non-financial performance, but it means the government's doing a good job at using the funds for whatever they're earmarked towards. So non-financial performances are very important, just as much so, if not more, as the financial ones. And also, I want to tell you, Will, right? Okay, so Will, I want to tell you, at any point I'm moving too fast, tell me. I'll slow down. If something doesn't make sense, tell me. I'll try to explain it the best of my ability in a different way. So just and it's just me and you. It looks like I'm gonna email the other student and find out what's going on. So you can holler out at me. You don't have to raise your hand or anything. We're not going to interrupt anybody else. Anyone else listening live stream or through the recording can just deal with our interaction or whatever. So just feel free, just make yourself comfortable and just stop me or say, hey, yo, you're going too fast over there. So just like I said, just communicate with me here. I don't want to lose you. So now we're going to get into some standard setters. I'm sure you've probably heard of some standard setters. What's one that you've heard of in the past in dealing with your accounting?
Like FASB?
FASB, exactly. So FASB, which is the Financial Accounting Standards Boards, right? So this is what we're talking about here for standard setters. The first one we're going to get into is going to be the FASAB, the FASAB, which is going to be the Federal Accounting Standards Advisory Board. And then these are going to be the three units of it down here. The GAO, which is the Governmental Accountability Office. Then we have the U.S. Treasury Department. And then the Office of Management and Budget, the OMB. And all these slides are posted in Moodle as well too. So unless you just want to take anything, if you're going to take notes, just additional to this will be that. So all these are available. And I believe it's telling me while I'm thinking of it. There's one of my courses when I click on a link for the PowerPoint, it requires a password. I don't know why it's doing that. If it does do that, let me know, and I'll figure out a way around it to make sure that you have access to the slides. And that's safe for people listening. You know. Just let me know if there's an issue when you click on the slide if you can't get the content, and I'll make sure that it's available. So that's your FASTSAB and the bodies that make up the FASTSAB. Continue on, the state and local governments. This is going to cover basic governments and entities owned or controlled by governments. The predecessor, I'm not really too concerned. I'm not getting into that whole hierarchy thing or the predecessors and who came before. But just to throw it out there, it was the NCGA, the National Council on Governmental Accounting. Just the FYI there. Private not-for-profits covers not-for-profits not controlled by government entities. They're private not-for-profit hospitals, colleges, museums, or so on and so forth, whatever it might be. So difference between that there. Okay, authoritative literature. The sources of authoritative GAAP for state and local governments. Have you ever got into the codifications or anything like that with the FASB codification? Have you heard of that?
Doesn't sound.
Okay, well that's where we're going to get into. The codification is the authoritative literature. Right here, for the authoritative literature, we have two categories. Category A is going to be GASB statements and interpretations. Category B is GASB's implementation guides, technical bulletins, literature of the AICPA, and that's going to be specifically cleared by the GASB. So, and we'll get it. I know it's probably thinking, okay, this is not making a lot of sense. It should make sense as we get into it a little bit more. Okay, so how this hierarchy works. So we know we had level A, level B. Okay, so level A is going to be your highest authority. It's going to hold the most water, right? So if an accounting treatment is for a transaction is not giving in level A, then you move on to level B. So pretty much, if you want to know how to account for a pension or something, or just any transaction dealing with how to record property taxes levied after whatever the period might be within whatever the current fiscal period might be. Whatever the transaction is, you're looking for guidance on how it's to be recorded. That's where you're searching the authoritative literature, because it's going to tell you what the authoritative body says is the correct way to account for the transaction. So that's pretty much what the codification is. It's pretty much your source. It's your holy grail for knowing how to account for transactions. And the FASB has them, the GASB, which is your Governmental Accounting Standards Board. So that's the difference. We're going to be playing with GASB. We use FASB as well. You'll see different organizations use different standard setters. But the whole idea here is that's where you go for directions. It's your instruction manual pretty much. You start with A. If you can't find it, you go to B. If you can't find it in B, then what do we do? Well, then we're going to try to look for a similar transaction, one that kind of mirrors the transaction that we have, and we'll search the relative, levels of authority. We'll start with A again and look for a similar transaction. If we can't find it, go to B. So first step, look for A for guidance. Look for B if it's not there. Look for something that mirrors it, something of a similar transaction, and see if you can find it in A or B, levels A or B. If you can't find any of that, if all else fails, then they allow us to use non-authoritative sources. And then this is just a list of some of them. I'm not going to read them, but here's a list at the bottom of here of what some of these non-authoritative lists are. So this is after you have already just went through all other possibilities. You just can't find anything else. Then you're allowed to use this. So it makes sense. That's what the codification's for. It's like an instruction manual, a one-stop shop. It has all the different procedures for recording transactions, and it's all in one spot there. So it's pretty much like an accountant's holy grail for knowing how to handle a transaction or whatever it might be. And that's how you go about it. Makes sense? Start the highest level, move around, and it's pretty much common sense on how to use it once you kind of get used to the terminology and the wording. Okay, the next thing that we're going to talk about is the concept statements. The concepts projects began around the 1970s, and it was to guide the standard setters in establishing GAAP. Um, Obviously, like I said, the concept statements just help the standard setters, like help guide them in setting or promulgating GAAP. So they're not intended to be authoritative GAAP. So really, when they have one of these concept statements, say if the GASB puts out these concept statements, it's not really authoritative literature. It's not in the codification. So, but it's used for guidance in order to help the standard setters reach their consensus or their conclusion on whatever it might be on whatever laws they're trying to set. Make sense? So codifications. The GASB, the FASB, and the FASAB publish codifications, which is just organized versions of accounting standards. So it's just an electronic database of all the accounting standards. The GASB is also going to publish a comprehensive collection of its implementation guides. And a good advantage of using the codification is all your authoritative literature and your guidance is in one. It's a one-stop shop. Everything's right there. The old standards and the old guidance that's been superseded has been deleted and went away. So only relevant data is in the codification. So it's really nice. It's a really nice thing. And I don't know if you're planning on taking the CPA examination. They do test decently in the codification on the familiar of the framework of it, and they'll give you a transaction, a situation, and have you search the codification and try to give the numbers from which it was, and we'll get into how all those work. But that's a good advantage of the codification. Prior to the codification, accountants had to search all different avenues, doing like old school research, look at books, go to libraries, do this, and that. So they've eliminated all that and just put everything into a one-stop shop. So it's nice. The codifications, it's a great tool for accountants. Some more on it. The GASB, FASB, FASAB publish codifications, obviously organized versions of accounting standards. As it says, as you would expect, GASB codifications also includes its statements, interpretations, and technical bulletins that are going to be issued by the GASB. However, the codification also includes level B standards. Remember, that's the step right below A, and they're going to be issued through the AICPA audit and accounting guides and statements of position. So how do we use the GASB codification? It's broken into two parts. The first section is going to identify a topic, okay? The second is going to identify a paragraph within the codification. So it's broken into two parts, and we'll see that right here. So two parts, topic and then a paragraph. So let's just take a look here for just a second. So that's how the format of it's set up. So as we can see here, sections 1000 through 1900 is going to be all about general principles, okay? 2000 to 2900, broad financial reporting requirements. Letters A through Z, specific balance sheet or operating accounts. And then the double letters are going to be specialized industries or reporting units. So that's where we start. That's the first part we'll start at, is through the topics section up there. And then from that point, once we pick a topic, then we'll get into the paragraphs. So this is the first step of it, and then this is going to be the second step. Because we're going to say, okay, well, we want to find something in general principles, and then maybe we're going to look for the GASB statements. Because here's your levels of authority. See how it starts with level A. GASB statements will be 100 through 499. 500 through 599 will be your definitions, and it's just lowering. So the 100 to 499 is your highest level A. These are still level A. Then we get to level B, level C, non-authoritative. So that's just a level of authority. This right here, just topics, just how they list it. So it's just a code, pretty much. And while we're on this, let's just look here. I don't know if you have your book or not yet. If you do not, I'll try to talk loud so they can hear me. Here's an example. Right here. If you can see just the reference. So here we have the 1000. See how it's 1000.101? That's how you'll see the codification if you're looking at the reference of it. So if we're going to look right here at this section of the codification, section 1000 indicates that this pertains to general principles, right? See how we pulled it from that section? And then the paragraph 101 presents the GAAP hierarchy, And since the paragraph number is less than 500, it comes from GASB statements. Make sense? And then it just gives you more examples. I'll let you, when you get your book, you can kind of see, but it gets into the letters. But it's the same thing. You're just pulling, so the first section will be, you start from your topics, and the second section after the dot is what paragraph. So that's how the code works. Not bad, right? Now, GASB's codification is set up a little bit different than FASB's. We won't be concerned with FASB's now, obviously. But that's GASB's codification. Pretty simple, right?
Yeah.
So it's basically just know your levels of authority, what's authoritative, what's not. You start with your topic, then you get into your paragraphs. And that's how you search for guidance. And it's pretty straightforward. It's just a roadmap. Now, it is a little difficult once you get in there because there's just so much information in it, but that's the gist of how it works, pretty much. Does that make sense to you? Okay. Okay, some more on concept statements. Obviously, all three standard setting bodies have a series of concept statements. The FASAB is the federal government. FASB is for private entities, we know that. And that's for your for-profit companies and your private not-for-profits, falls under FASB. GASB is going to be your state and local governments, and then that's going to be your private not-for-profits is going to be, not private, I'm sorry, but your governmental not-for-profit sponsored ones are going to fall under GASB. So FASAB concept statements, they have 8 statements, and pretty much we'll just read through what they are through here. Concept 1 is going to be the objectives of federal financial reporting. The second one is entity and display. Concept 3, management's discussion and analysis. The fourth concept is intended audience and qualitative characteristics for the consolidated financial report of the United States government. Concept 5 is going to be the definitions of elements and basic recognition criteria for accrual basis financial statements. The sixth concept is distinguishing basic information, required supplementary information, and other accompanying information. The seventh concept is going to be measurement of elements of accrual basis financial statements after initial recording. And then concept 8 is federal financial reporting. So I know we kind of just moved through those, but that's just showing what the concepts are. So what are some of the objectives of not-for-profit financial reports? The main objective is going to be to provide useful information to its users, which is the same as for-profit organizations that provide useful information. And it's going to be to provide it to present and potential resource providers, which is the same, and others in making decisions about allocating resources to the not-for-profit organization. So a lot of it's the same. It's based upon the users. We're doing it as a service, providing a service to the users. So we're tailoring it to the specific users. They're going to emphasize that donors, government grantors, and banks are going to be the primary users of these, which makes sense because donors are going to be giving donations for governments, for charities, or whatever it might be. Government grantors, banks, all of them have their hands on it. So that's going to be our main audience, our main users. So GASB concept statements, this will be our last part here, getting through the concept statements, the next few little slides here, and then that'll wrap up today's lecture. GASB concept statement number 1, the objectives is citizens have a right to know where resources are being used and how they're being raised. GASB number 1, objectives of financial statements. It allows a comparison of actual with budgeted results. And we'll get into here. You'll see that there has to be a budget. Obviously, we know we've already talked about how important the role of the budget is. So the budget is going to have an actual the actual budget compared to what the predicted budget was. So it's going to that'll help the users assess the financial condition and results of operation. It'll help show the compliance with laws, rules, and regulations. And it'll assist in evaluating the efficiency and effectiveness. Concept statements number 2 and number 5. Service efforts and accomplishments reporting, and amended by concept statements number 5, covered in chapter 13. We're not going to do chapter 13, so I'm not going to really touch much on that right now. It's going to include both financial and non-financial measures of performance. GASB concept statement number 3 is going to deal with communication methods and the general purpose financial reports that contain the basic financial statements. This established a framework for what information is supposed to be is to be presented. As we know, basic financial statements. Then we have notes, required supplementary information, and supplementary information. So that's going to be the main outlay of our statements. They will have different statements for different types of funds, as we'll see, but that's pretty much the main framework for the overall look at it. Slide 24 here, GASB concept statement number 4, provides key definitions of items appearing in financial statements, assets, liabilities, and net position. So pretty much same thing as we had before, because we know balance sheet for businesses, your assets, liabilities, and equity. Equity same as net position pretty much. Residual equity, same thing. Net equity, whatever, net assets, all the same things. So GASB utilizes 2 additional elements that do not appear in the balance sheet of non-governmental organizations. And so this can be the main difference we see here. We have, on governmental, we're going to have deferred inflows and deferred outflows of resources. So we're going to be deferring some things. The biggest deferred inflow of a resource is going to be that of property taxes that were levied that haven't been collected yet, or that's going to be collected after the fiscal year, but still within the point to when we still count it, and we'll get into that. I believe it's 60 days after the calendar year ends. We'll get into that later. So that's going to be your biggest example of like a deferred inflow. That the other stuff that's going to be recorded in these deferred inflows and deferred outflows. A good way to give you an idea of some of the activities and transactions that are recorded in there. It's a lot very similar to that of like the AOCI, which is the accumulated other comprehensive income. The transactions that are recorded in there in your traditional for-profit businesses stuff. And some typical transactions you'll see in AOCI and your traditional for-profit businesses will be like changes in your prior service costs for your pensions, for a change in a pension plan, or a change in accounting for a derivative, like a hedging of a derivative when you're speculating or hedging. So it's just stuff of that sort of stuff we'll expect to see in these categories of deferred inflows and deferred outflows. But like I said, the main one coming in is going to be that of taxes. GASB statement number 6 examines the issue of when it is most appropriate to measure assets and liabilities at historical cost, and when it's more appropriate to remeasure assets to fair value or settlement amount. In general, measurement is appropriate for assets that will be converted to cash and liabilities where there is uncertainty over the timing and amounts of payments. So obviously here we know that same as in your for-profit sector, we have stuff carried at historical cost, like land. We know land is carried at historical cost. A lot of your trading investments or available for sales are marked to market at the end of each reporting period and are carried at fair value with the difference or the change recognized in current period's earnings and stuff like that. So pretty much same thing here. Measure different measurement attributes for different elements that within the financials. So, and my last thing to point out here, what's important, I want to go back, is knowing the definition of a government, because it's important to know, because there's different standard setters. You've got the FASB, the GASB, and different ones apply to different units, whether they're private, public, or for-profit, not-for-profit, whatever it might be. So it's good to know what a government, what the definition of a government is. Because you have to know what accounting treatment applies to whatever type of entity you have. So the definition of a government, I'm just going to read through what the book says, is public corporations and bodies corporate and politic are governmental organizations. Other organizations are governmental organizations if they have one or more of the following characteristics. Popular election of officers or appointment or approval of a controlling majority of the members of the organization's governing body by officials of one or more state or local governments. the potential for unilateral dissolution of a government with the net resources reverting to a government, or the power to enact or enforce a tax levy. So those are your definition of what an actual government is. Just so you have an idea of what the characteristics of that government is, and we'll touch more on that as we move forward. But I just wanted to point out near the end of this lecture that it is important to know, have an idea of what a government actually is, and to be able to identify what type of entity it is, so we know which type of framework to apply, GASB, FASB, to know which type it falls under. Does that make sense? Um, that's all I have for us today. We'll pick up with the second half of chapter 1. We might be able to finish chapter 1 on Friday and start chapter 2 Monday. You'll see on the syllabus I've got them kind of rolling in to one another a little bit, the lessons. And I actually redid the syllabus. I posted it to the course. I gave you a printout of the old one. The only thing that changed was on the second half of the course. I kind of just made it roll like the first half of the course, with chapters being continued into the following week. So it's kind of irrelevant. I just did it just because I'm OCD and I wanted people to be able to see it. But the whole point of that is just to say, we're going to move about a chapter a week, but it could give or take, obviously. Any questions on anything we've covered so far today? You're good. It makes sense so far what we've covered. Have a decent idea kind of where we're going now, and you see a little bit of a difference between the two sectors. Well, that's good. That was my main point today, is just to kind of get through what we did, and then on Friday we'll start getting into, I believe we get into the actual funds and the actual statements that are used. It'll give us a little overview, and we'll spend the entire class on Friday going over that, because that's real important stuff moving forward. It'll be helpful moving forward if we have a good grasp on that stuff. So once again, that's all I have for everyone. Once again, try to get signed into the Connect. Try to get your textbooks. The first assignment in this class is not due until next Sunday at 11:59 p.m. So you have until next Sunday to get that in, and then prospectively from that point moving forward, we're going to be due every week moving forward. So and you'll see everything's mapped out in Connect of when the due dates are due in each relative chapter. So that's all I have for everyone, and we'll continue chapter 1 on Friday, and we should wrap it up. And please let me know if you have trouble getting into the PowerPoints, if that's this class that I'm thinking about. So hope everyone has a good day, and I will see everyone on Friday.